Good afternoon, everybody. This is George from GettingMarketMoney.com, and it's March 22nd with today's edition of Currency Corner. Now, before we get into it, I do know we've been on a little bit of a hiatus here. We've been on an absence without leave, and to explain that, there was a few things that came up with the scheduling and with the website itself, but we do have some great things planned in the future in terms of expansion, including a member zone for which there will be a higher level of service. Initially, there will be no cost, and to those that sign up sooner rather than later, they'll be rewarded with free lifetime membership. But as inflation's going up and costs are increasing, we don't guarantee that for everybody. So sign up, be part of this experience, and I believe you get a lot out of it as you get a chance to interact with other people, and we build the site into something great. So take part in history. Now that's it for the sales pitch for the day. We'll get right into the charts. Now what we're looking at here is a snapshot of the day provided to us by our friends at Bloomberg. So we can see Dow, S&P, NASDAQ down less than 0.5%. So it's been quite a muted day considering recent action. And for that, we like that. I mean, volatility isn't always our friend. And as you can see here in Europe, it's looking as bleak. Nikkei has just opened as well. It's been open for about an hour and a half, and they're trading at 127 points to the red. So there's a bit of a sell-off here as we see some profit taking. Commodities are currently stabilized and holding their ground. Gold's holding that 1420 level, the resistance, or support rather, my apologies. Oil's up slightly on the Libyan crisis and developments there. Now, that's the political mess is a whole different issue that we won't get into. There are differences of opinions there, etc. And drastic things are happening in terms of political developments, but we'll leave that to the politicians and to take control of and discuss. It's not our place. The only thing we can do is it might spawn a trade for long oil. However, it's currently overpriced, so we'll leave that alone, and we'll stick to the forex market, where we're experienced and dedicated to squeezing profits out of that avenue. So let's get into it without further ado. Tomorrow we'll be seeing some news releases, and nothing considerably important other than Bernanke speaking. Bernanke has been speaking quite a bit. He's taken a liking to the camera and the limelight, so he goes on record quite often. We could expect to see short movements in there and possible fluctuations as traders try to dissect every single syllable of his words in order to make direction out of that in regards to interest rate outlooks. Now, that's a dangerous game to play. I'll be honest with you, I won't be there at 12 o'clock. I'll probably be out by that time myself, as I try not to trade Forex late into the US session. I get out myself around 11 p.m. as the London markets close. So that's pretty much what we're looking at tomorrow. As we can see, crude oil inventories for the oil traders, that will have significance, and we're looking to have a build of inventory rather. And the supply has been damaged a little bit from the Libyan crisis, but not enough to affect the overall picture. So tomorrow could be a bearish day for the oil traders. New home sales are coming out at 10 a.m. They're forecasted at 291,000. I think it'll be quite near that number. It won't cause too much disruption in the Forex market. So going over to the Forex market actually now, what we're looking at is a Euro USD. That's a daily chart. So you can see recent price actions taking us as high as 142.93, which tends to be quite a high level. So I could show you going back to on the weekly chart here. It's been a level where price action has seen considerable resistance in the past. So you can see going back to even 1991, these levels here have made significant resistance levels, and as such, given that it's currently at that level now, we look for a short-term sell-off and price actions possibly to this level here. Just going to put on the chart. Once we see this trend line give, we wouldn't be surprised to see a retest of around this level, if not even further down to this level. Now, previous support level I was speaking with is actually more along the lines of around here, so we could definitely see a bounce. And then we switch colors here. Oh, not for that one. And then we go to the upside from here and effectively probably create a range between these levels. I wouldn't be surprised to see it drop to 135, and that's where my expectation is. And I'd be extremely surprised to see it go at 142.93 and above. So currently Euro USD is in a pinch right now. Effectively setting a range. The US dollar is overly sold off. I mean, everybody in the grandma is short, and when that happens, too many people go to one side. That usually ends up being the tipping point. So if we look at the UUP ETF, which is a US dollar index versus the 6 major currencies, this is what it looks like. And one thing we wanted to point out here is numerous times when price action actually ends up touching the volume on these charts, it ends up being a reversal point. And here I'll show you what I'm talking about. There's 1, there's 2, 3, 4, and if you notice where we are now, another 5th point. So as we can see here, I mean, these points are an oversold territory, and breaking this would be pretty much a 3-year low. So let's take those out for now, and I just wanted to show that that's what we're working with at the moment. So currently oversold a little bit. I think people are pushing the envelope a tad bit too much, and don't really expect to see that level give out the or I expect it to actually come back and retest around the 22 level. We're currently at 21.66. Now once we get to the 22, we can see a little more downside, but I do believe in the medium term the dollar will have to rally a little bit from this point, and we could squeeze a profit. So the overnight play is, as mentioned, short the Euro USD. Keep a tight stop loss on this, say 142.93. Mind you, that's a daily chart, and it is a bit of a stretch for a stop loss. So if you wanted to really keep things on the tight side, you would stop loss it effectively around 141.85, which gives you around 15 pips or so. That's a bit of a riskier strategy. You could even go around this level here, and 142.17 I believe would be a better target to add a stop loss. So that's the daily trade. Short the euro along the US into the open of the London markets and the current Asian markets that are open as we speak. The last thing I wanted to bring your attention to, yesterday evening actually Kevin discussed this in a little more detail. This is the Dow Jones Index, and he mentioned support at the 50 EMA level, and it's a great call. I mean, at the moment it looks like, you know, it's reacting to that level. 12,018 points or so at the close, and Kevin and myself actually as a collective do believe and happen to agree on this going further down, and is an excellent opportunity for a sell into the market. Now I'll keep you posted on that. It's not my place to speculate on broad market movements at the moment. I like the currency market. It's been rather reactive and it's offered good opportunity for profit. But again, for those of you that follow equity markets, we see this as a retracement to a downtrend and potentially a larger sell-off in the days to come, bringing us down to potentially 11,500 level, which is not arbitrary. It is this level right here. So that's where we see it going, and that's for the Dow Jones Index. And lastly, the news recently is, I just want to share this with you guys on Bloomberg.com. I find this extremely interesting, other than the fact that Li Ka-shing is offering real estate investment trust now, hitting an IPO. I urge you all to read this article. It's extremely important to read situations like this, and it's come about that somebody was aware of the situation prior to the development of the nuclear reactor crisis. And the good news is that the mess has been, important actions have been taken to resolve and settle the mess that's going on at the moment. So the electricity is back. they could funnel and run the cold water through the reactors to keep them cool. So we look for the Japanese markets to cool off as well, the risk on, or the risk off cycle rather, to cool off and take us to potentially a bit of a rebound on the European side. So that's all for today. We'll keep it short and brief, and this is a weekly update. For the rest of the week, look for retracements to continue and the downside, the bearish side, to extend. Any long or strength in the market should be sold into and not the opposite. And just keep your shirt, don't lose your shirt out there. Just live to fight another day. Keep those stop losses under control, manage your risk, and trade well. And again, I want to mention that becoming a member and signing up at gettingmarketmoney.com will allow you to access more exclusive content, such as more regular updates, the potential to sign up for a mailing list for live trades that we place between Kevin, myself, and a few other members who are going to be going online shortly as well. So take advantage of that, and I hope to see you guys in the member room. Have yourselves a great week, and we'll touch base. Take care. This is George. Bye-bye.